Hello and welcome to another update video about Bitcoin. So overall, with Bitcoin's drop yesterday, the altcoins lost quite a lot as well, but not as much as on the weekend. And I guess the reason for that was because a lot of the altcoins were just massively oversold on the weekend already. So Bitcoin lost quite a bit yesterday. It obviously moved to the, I basically readjusted or rearranged here this descending wedge. So with Bitcoin finding resistance up here at around 40k, we can, I could rearrange the resistance line of that wedge, and it just shows that here we found resistance. Someone has been telling me that this is actually a channel. I've tried everything. I don't know. I can't see it. If you can see a channel in here, let me know. I can only see a wedge. Yeah, I can only see a wedge. I tried to rearrange it in a channel and I can't see it. Maybe I'm blind, but I can't do it without cutting through any candles or anything. So yeah, for me this is still a wedge, and for me we broke out of the wedge to the downside. That is how it is currently looking. That is of course not bullish at all. I looked into what could an alternative wave count be. I'm currently not quite sure. I would like to see a few further moves for Bitcoin. The thing is, the ideas I come up with here, they are super bearish. So they actually, for whatever I've come up with two things here, and maybe I need to think about them further in the morning, or throughout the morning today. But the two options I've come up with, they actually they would mean that Bitcoin won't end in here in the 20 to 29k area. We can even then look at prices below 15k. That is why I really need to rethink it before I create any panic here. So I don't really want to do that at the moment. So let's see. This seems to be something more bearish than even I expected. Yeah. So obviously we've been talking about prices between 20 and 29k since November. I think so far we're getting closer and closer. Yeah. But yeah, I don't want to rush into this here. So I want to give it another thought. Elliott Wave counts take time. So yeah, you probably have another updated count in the next video. What we're currently doing here, I currently still have this labeled as wave 5 and wave 1, and that is possible. It is still possible, but again, I want to give it some further thought about what could be happening here. But from just a sort of more traditional technical analysis perspective, what we've done, we've obviously made lower lows here, confirming that overall downtrend in which we are. Here we obviously did not manage to break above that resistance level. That is why I had it on the chart, because it is quite relevant. Couldn't even break it. This is the area between 40.4k and 40.8. So between these two swing highs, only above that, the price would have been able to get into this target area, some mid-video techno, to get into the green target area up there, which is still where I do expect a price to go into after a wave 1. So we need, in any downtrend, usually a corrective move up. Now, if that doesn't happen, it would be even more bearish, as I said, than expected. So I'm still expecting at the moment that larger move up. Bear in mind, anybody who takes a long trade into this is playing with fire. It would be going long in a downtrend. It is going long in a corrective wave. The risk trading a corrective wave long is higher. It's of course possible, yeah, but the risk is higher because the move down is of course much stronger than the move up. So naturally in a correction, if you are in a downtrend and the correction goes up, then the correction is always very weak compared to the impulse which is coming down. Therefore, there is high risk. Therefore, use a stop loss. Yeah, and if you use leverage, you have to use a stop loss anyway. So that's just as a side note here. But what we have done, we have obviously come down very impulsively, and we're currently hovering below the support line of the wedge, and that looks like a consolidation after a downtrend. We can again define this consolidation in terms of drawing a few trend lines here, which allow us to understand that where a potential breakout point could be. And again, all of these are interesting trade setups, or would lead to a continuation in the chart. What we can see here is some kind of a triangle, yeah, after a strong downtrend, typically a neutral pattern. After a downtrend, you would expect this normally to break to the downside, but it doesn't have to. Therefore, we always have to wait for the breakout. The thing is, to the upside, you have here that wedge pattern. So we have resistance here at 36.7, and you have resistance here now in this kind of wedge itself. Just thinking, can we actually make that? No, I can't really just move that further down. So what I could imagine is that we move up a little bit higher in that triangle. So it could be a little bit of a fake out to the upside. That's just a pure guess at the moment. And that we just retest here the wedge and then come down further. If you have a long wick like that here, that came down to 35.5, oftentimes at some point it will get filled. You know that on this channel we are expecting lower prices anyway. So about any lower prices, I would be happy because it would confirm my higher level wave count overall. But at the moment here in the short term, we are obviously range bound here in a triangle. And again, we need to wait out for a breakout. Typically what I just would have to expect based on probabilities and what normally happens after such a strong move down and the consolidation, it would be typically a further move to the downside. But on the other hand, we have dropped so much already here that we have yesterday been just oversold. So let's take a look here on the 4-hour chart on the RSI. You have been oversold. But that is the purpose of moving in such a triangle like that, to consolidate and to recover a little bit from that drop and to bring the RSI higher, for example. So at the moment in a triangle, primary expectation would actually now be that we drop further, but this obviously can change as soon as you go back into the wedge. I think then obviously we're back in the wedge, we're back in another range, and then we can also move all the way up to, in the first instance, 39.2k again. So that is the purpose of these patterns. If you break out of one, you break into another one, then of course you unlock again that price range within that wedge. So let me just show you, when we get back into the wedge, we could, without a problem, I think, go all the way up to 39.2k again. If we drop out to the downside of this triangle, then first target would be here the 35.5k level of 35.6, the previous swing low here, with a wick that could get filled, and to the downside even further. Very important level, 34.4. If we drop below 34.4, that will pretty much kill that scenario up here. So I had for a while this alternative on the chart, where should we really in this I would call it a bear flag, yeah, in this overall bear flag here that you can see, this larger wave 4, that is how I have it labeled at the moment. If you really break out of that to the upside, my view would be that we come into this area between 55 and 65k in an alternative wave count. But this scenario would pretty much die or get super unlikely below 34.4k. And I will of course update you as soon as that happens. For now, it means a little bit of waiting. There is no space here for speculating where the price could go, because we are currently in a pattern. We are in a triangle, as I said, typically a neutral pattern, but yeah, because you are coming down here so impulsively, you dropped out of that wedge to the downside. We could expect here this to move further down and to fill that wick at least, but we won't know until that triangle gets broken. And I will work this morning on a potentially alternative wave count that I can then show you in the next video. Looking at the indicators, maybe to finish this off with, on the daily chart, bullish crossover prevented, actually also a very bearish sign. On the daily, we saw here one bar of a potential bullish crossover here on the MACD that was prevented. That is actually a very bearish signal. 2-day chart, yeah, same picture here. 4-day chart, very important, the 4-day chart also here. I mean, we already had that bearish crossover here. And as I said, when I went through the indicators in one of the videos in the last few days, I showed you this bearish crossover on the 4-day chart, and I showed you that is the reason why I do not think that we are getting back here easily into a bull run. Yeah, so the downward pressure is still there. A lot of people still say the low could be in for Bitcoin, now I don't see it. I haven't seen it for a long time. Yeah. So therefore, these higher level indicators are so valuable. So again, this was confirmed with the latest move down that we are still in that downtrend. You know, when you are back in an uptrend, which many people still believe, yeah, then you wouldn't make such a huge engulfing candle to the downside. I mean, I'd be massively surprised. And on the weekly here as well, bearish crossover. So the longer term charts really point to the downside further. This here would have been a short-term upside that was there. The market didn't do it. The market failed in this instance to follow this wave count, but I still think this could still be coming, but it would be even even more bearish than probably even I expected, even though I'm always called too bearish. And then month, and this is what we've been talking about 4 months as well, that bearish crossover here. I remember when we talked about that in December already. This is still playing out, yeah. And this also, I think, is a bit of a lesson for everybody, how long such a correction can actually take. I remember when we talked about the bearish crossover here on the monthly chart, a lot of people said, oh wow, that means that the correction won't be over for months. And you can see actually why. And it's actually true. It is taking longer and longer. So that MACD line was very high. It still is high, and we cannot see a sign of slowing down the downtrend on the monthly MACD. Only as soon as we see here a potential relief rally or a potential reduction of negative momentum on the monthly, or at least here on the weekly, some kind of a bullish crossover again, then we have to assume further lower prices. Short-term noise to the upside, of course, also always possible. Part of that would be that wave 2 move up. But now we have to face a situation that on the weekly we now have 6 red candles here in a row. And if Bitcoin closes this weekly candle below 38.5, then this would be another red candle. And having 6 red candles in a row, I think Bitcoin didn't have that since 2014. I would need to double check that. But that is quite a long time, isn't it? Okay, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership and maybe even the trading course I'm currently uploading to the website. There's an early bird offer for everybody who's taking this course now. Yeah, I upload 1 chapter per week. There will be 15 chapters. We're currently in chapter 3 that will be completed on the weekend. And after that, we start chapter 4.